Hi folks! In my previous video, I've discussed the best tech stocks that did buy a lot recently and explained in detail my bullish case for each company. But tech stocks are usually riskier and far more suitable for experienced investors or for those with higher risk tolerance. But it isn't the best approach for beginners or for those looking for a stable passive income, especially when you are a young investor who doesn't have a high income or established net worth just yet. That is why today I will do quite the opposite and tell you about the best stocks for worry-free investing that will earn you the highest passive income while keeping you away from the risks. I've chosen these stocks not only because they pay their shareholders extremely well, but also because they have a history of dividend stability as well as a solid growth that consistently beats inflation. So you're winning in both cases. You keep on growing your money by getting paid in dividends, increasing your net worth, while also keeping up with inflation by the stock's moderate growth. The companies I have prepared for you today have a well-established and proven record of generating solid earnings. And while they don't necessarily grow as fast as tech stocks do, they pay you the greatest deal of passive income and open the doors for beginners in the fabulous world of investing. I picked the 3 finest companies to do just that, so let's talk about each of them in detail. I'm sure most of you have already heard about my first stock selection for today, since it's kind of a celebrity of the Canadian stock market and indeed one of the best dividend stocks in Canada and the US. Okay, it's time to talk about Enbridge. First of all, it's always useful to have a few energy companies in your stock portfolio because it is a relatively stable industry that consistently pays great dividends. Especially after the war with Ukraine that Putin's regime started, the high oil prices aren't going anywhere in the near future. Personally, I also have Vermilion, Suncor Energy and Pembina Pipeline in my portfolio, though Enbridge is my favorite energy stock when it comes to dividend investing. So why, you would ask? Well, first of all, it is the largest energy infrastructure company in North America, serving almost 4 million customers in Canada and the United States in 5 key segments: gas transmission, midstream and distribution, meaning the gas utility operations for residential, commercial and industrial customers in Ontario, Quebec and New Brunswick. And of course, Enbridge also operates in the green power and renewable energy sector and has facilities all over Canada and the US. Also, Enbridge pays extremely well to their shareholders, with a 6.25% dividend yield. And just before we continue, I kindly ask you to like this video and subscribe to my channel. It only takes you a few seconds, but it would be tremendously appreciated. That's just how YouTube works nowadays, so we can make algorithms to recommend my content to more people so they can get free and helpful information about real estate, finances and investments. Besides, while 2 other famous oil companies like Suncor Energy and Vermilion had a crazy rally in the last few months because they are also way more volatile, especially the latter, Enbridge represents one of the most stable companies out there. Their growth is slower, sure, but way more consistent. What I'm saying here is that their stock price still has room to grow, while providing the shareholders with an amazing 6.25% dividend yield. Not many companies can say that. If one of my viewers happened to be a millionaire, say you put 1 mil into Enbridge, and by doing that you generate yourself a stable early income of $60,000 in just the dividends, which is more than the national average salary in Canada. Not bad, right? Pretty much invest $1 million and retire. If you invest $100,000, you get just about $6,200 a year, which is also pretty decent. Plus, in any scenario, you're still earning the additional money on the stock growth. So again, you're not only beating the inflation by the nature of stock growth, you're also getting amazing dividends that many tech stocks just cannot provide to you. By obvious reasons, they just don't do that. In a year, Enbridge rose by 22%, from $45 to $56. And though I don't expect quite the same results this year, I am pretty sure that it's still going to beat the inflation and show maybe 8 to 10% growth. Okay, since we've pretty much covered the energy sector, I suggest we get to an even more secure industry, the banking. Canadian Imperial Bank of Commerce is a diversified financial institution that offers numerous financial products for personal and business sectors, including checking, savings and business accounts, loans, lines of credit, and of course credit cards and investment services. Just a few weeks ago, the report showed that both CIBC and the National Bank reported soaring profits and expect revenue to climb even higher this year. They have clients all over the world in 4 business units: Canadian personal and small business banking, US commercial banking and wealth management, and capital markets, of course. According to the market beat, the short interest for CIBC has also grown by 46.5%, while many predict their price to reach $170 by the end of the year. CIBC stock fell by 3% last month, and it is an attractive buy, at least for me, at $158. Their dividend yield is a solid 5.76%, and while it's lower than Enbridge, the banking industry overall, in my opinion, is way more future-proof and has more room for the stock to grow. Their financial performance is also quite good, as CIBC outperforms the market almost every year, with just one exception of 2020 because of the COVID crisis, when they have shown $1 billion less in revenue compared to 2019, but in 2022 the revenue was up again by a solid 22%. The other highly secure and reliable sector has always been and will be utilities. The Capital Power Corporation pays well with a strong dividend yield of 5.5%, and the company develops, acquires, owns and operates power generation facilities throughout Canada and the US. They sell electricity that comes from various sources, like natural and landfill gas, coal, wind, solar, and solid fuels. The company owns an impressive 5,000 megawatts of power generation capacity and is one of the biggest in their field. I wouldn't expect crazy growth here, but we will see a $45 mark at some point later this year, at least in my opinion. Of course, we also have insurance and communication stocks that generally do extremely well and also have impressive dividends. For example, I also like TELUS and Manulife, but we will talk about them some other time, as they just don't have overly impressive dividends right now, nor a huge promise of growth. And I do believe that the stocks that we talk about today are better for dividend investing. Even if you start small within $10,000 range, you still get to beat the inflation and get a pretty solid pay. I wouldn't suggest investing all your money in just one company, as it's always better to stay diversified and invest in a few that you like the most. Thank you so much for watching. I do hope that you found this video helpful, and if you do have any better suggestions for dividend investors or have something to add in your mind, please leave your comment below and I would gladly take that into consideration. Thank you so much again, and I will see you next week.